Hey everyone, me Kevin here. So I have a few updates for you for HouseHack. It's serious. Things at HouseHack are going way better than expected. And it honestly makes me tear up because I really believe that we're gonna look back in 10 years as a community, whether you're accredited or not. Don't worry, I got updates for if you're not, don't worry. We're gonna look back in 10 years and go, holy smokes, look at what we did. Not with Wall Street suits, but as a community of people interested in finance. We'll hopefully look back and say we've transformed residential real estate, hospitality, short-term rentals, and maybe even elements of fintech and banking. I'm so excited to be on the ground floor with you, and I'm so excited to announce to you how far we've come in just 19 days, how much we've raised, and what the average raise has been so far. But some quick reminders before I hit the numbers. A lot of folks are asking me, Kevin, can you just give me an elevator pitch? Because look, the reality is, Kevin, you're raising money at the bottom of the market, okay? We are at the S&P 500 lows, where we were in June, is where basically we are right now, give or take a few points, okay? We are literally at the bottom of the market. How much money could you possibly raise, and what are you doing at the bottom of the freaking stock market? Well, here's the elevator pitch first. HouseHack is a C corporation. That means your investment has limited liability, right? It's a startup that is going to start out by doing what I do best, buying below market value wedge deals, single family, multifamily. I've done this for over a decade, and now we're going to scale it with HouseHack because the time is close to being perfect. The time to start the company is perfect now because we got to prepare for what we expect will be the bottom in 2023 or 2024 to start deploying. In the meantime, we'll prepare our strong foundation, not only by becoming even more expert in the markets that we've identified, but we'll likely yield farm with rolling 6-month treasuries at desirable yields of between 3.7 and 4%, which is honestly remarkable for cash that we're going to temporarily wait on until we have the right opportunity to buy real estate. And once we see that opportunity, which will probably be months before official data comes out from the realtor associations, we'll already be buying wedge deals. And we're going to build a strong foundation of cash flow. We're going to rent out single family and multifamily homes. This isn't rocket science. It's a proven business, and it's historically been quite safe, especially if you're buying properties with cash. But we're only going to do that as we get started, as we build the foundation, because we want to be able to amplify returns as much as possible. So we hope to multiply our cash flow in the future when interest rates have come down by not only refinancing our cash-owned properties, but also mixing in short-term rentals and other sources of revenue. We're going to be very, very methodical. So in the future, this is going to be down the road, we even expect to introduce other forms of revenue and disruptive services in, quite frankly, real estate software, real estate accommodations, including short and medium term rentals, hoteliering, and maybe even fintech and banking. Stay tuned. We've got some pretty incredible ideas, but everything we're going to do, we're going to sort of layer on when the time is right, because look, we're going through a global crisis. We have to start slowly and safely. We have to respect economic risks and uncertainties. In my opinion, there are very few people who study the macro economy like I do, and I really love studying the macro economy, and I love studying the real estate cycle. And HouseHack is just the culmination of these things together, and it's really, really exciting. But the cool thing too is we get to use YouTube in coordination with HouseHack in a win-win relationship. For example, this Monday on October 3rd, I will be in Broward County, Florida. Yeah, that's after the hurricane passes through. If you're an agent in Broward County, Florida, which happens to be the county that I grew up in, send me a DM on Instagram. I can't meet everyone, but if you give me an itinerary, you got a 954 area code, maybe a 754, okay, maybe, and you've got some really good ideas in terms of, hey, Kevin, you might want to take a look at how some things have changed over the last few years, I'd love to start exploring. We've got a lot of areas that we're going to be exploring over the next 6 months, including Utah, Florida, Texas, other parts of the coastline, whether it's Washington or California or Nevada, you name it. We've got a lot of target destinations, but we're going to stick with a core 3 to 5 at first. And we're going to start by exploring and having this symbiotic relationship between exploring with documenting the process on YouTube, but then also looking for deals for HouseHack. Notice how now we can build that symbiotic relationship. See, and guess what? Most Regulation D offerings, which is what we're doing, use large third-party platforms that charge substantial fees for raising money. Some of these platforms raise money and charge 5 to 10% in fees, or they take an equivalent amount in equity in the company, which is absolutely insane. Like, the fees of the number that we raise that I'm about to tell you would be nutso. Watch this. Outside of our small and manageable payroll, which we've only had essentially 19, call it maybe even 30 days of expenses for payroll, which is super nominal, super nominal. We are excited to announce that we have raised $21,631,500 with an average investment of $53,998. Absolutely incredible. In 19 days via YouTube, we have raised $1,138,500 per day. And we have done it by setting up our own efficient systems at the lowest cost possible, rather than listing on other crowdfunding websites that are going to charge us 5 to 10% fees. Think about that. If we got charged a 5% fee on raising $21.6 million, we would have had to cut a check to some other company for $1 million, over $1 million, be like $1,081,000. That's insane. But we don't like wasting money. We like saving money and being efficient with our money. And that's exactly how we're going to disrupt real estate as well. All the way through, we are going to do what we need to do to make sure we minimize expenses and maximize profit. For example, somebody asked me, hey Kevin, how come you're charging investors the reimbursement of the wire fee? Which I quickly responded to and said, why would we cover that? If investors are sending us $50,000, they can pay the $15 wire fee. And somebody asked, well, but Kevin, it's $15, that's not a big deal, right? Well, you have to look at it this way. If we had 2,000 investors times $15, which is really nominal for all the other investors getting founder shares, that's $30,000. That's almost an entire year of one property's rental income, its gross rental income, gone, poof, because of wire fees. Why would we do that? That doesn't make sense. And so these are just a couple examples of how we're making business decisions to not only invite people in an efficient way, but to make sure that as a corporation, we're saving as much money as possible, especially during an economic crisis. This is really important. Now, the other thing that's really important for you to remember is that I'm so confident in this company that myself and my wife, Lauren, expect to receive absolutely zero pay or bonuses until we IPO. Only once we IPO, hopefully this decade, we expect to receive stock compensation. However, our compensation will likely be predicated on some form of a minimum return on your investment, like a minimum increase in valuation, for example, a double in valuation of the company, and will likely be subject to really strict lockups as well. So that way we're really some of the last ones who are able to sell. We'll probably have like a 4-year vesting structure and then a 4 to 5 year lockup period with only just small little roll-offs. So that way we better bring a really marketable company to the market. Otherwise we're left holding the bag, not you. That's the plan. We want people to know that HouseHack is what we're creating, not just for our families, but for you. And I'm putting my reputation on the line for this company because I believe it's going to be great. We're also selling founder shares at a 1-to-1 valuation. That means if we raise $100 million by the end of this process, the company is worth $100 million. We're not diluting anyone day one. Sure, there'll be stock-based comp in the future, and there are operating expenses for CPAs and attorneys, but there's no valuation dilution that you traditionally have in almost every single company up front. So if the market doesn't like us in the future, you could get out at hopefully a higher valuation, and we're the ones still stuck. But that's okay because we really believe we're going to be delivering an excellent product. Of course, with the verticals we have planned and our expansion plans, we actually think it's going to be an honor to diamond hand HouseHack, and we've got a lot of potential for growth. So we're not even worried about selling. That's not even a consideration right now. We've got a great company to continue building. Now, if you want to join me and you're not yet an accredited investor, don't worry. I just spoke with my attorneys again today, and we're scheduling our audits so that way non-accredited investors can join once we have our Regulation A offer ready. Now, we can't guarantee that non-accredited investors will be able to get the same founder valuation at this time. Maybe we can, I'm not sure. It's going to depend on timing. But the accredited or non-accredited investor round will certainly likely have fewer warrants than what accredited investors are able to get today. That's because every single month, the amount of warrants that you can receive decline. For example, on September 30th, which is this Friday, there's going to be a decline in the amount of warrants that you can receive from a max of potentially 65% down to 60%. And then the next decline on October 31st is going to be a 10% decline. Now, warrants, while they're kind of like free bonus call options, they're not call options since they're contracts with HouseHack and they're subject to you investing as an accredited investor at the moment, but they operate kind of in the similar way where you get the right to invest more at the same valuation as today in the future, which is kind of cool because it means, in a year or two from now, when we redeem those warrants, you could be like, are you guys doing well? Oh yeah, I'd actually love to invest more money, or, ooh, no, I don't want to invest more money, right? So that gives you that opportunity. Now, if you want to join me on this journey and you are an accredited investor, right now you can go to househack.com and do so. As an accredited investor, you would generally want to send us some form of proof that you're an accredited investor along with your ID and how much you'd like to invest. You can invest through your retirement account or your Roth IRA, which is kind of neat because then you could potentially invest in a startup and then grow that money tax-free, kind of like Peter Thiel did, which is pretty awesome. Now, you'll need a letter from your CPA or attorney stating that you're accredited. A broker would work as well. That is an institutional broker like a Series 7. You can send us your IRS Form 1040 for the last 2 years or your W-2s for the last 2 years, showing us more than $200,000 of income for yourself or $300,000 jointly. Or you can get a letter from investready.com. That's investready.com. If you're an international investor, the same rules apply for you. You can invest. You just must follow the same rules that I just outlined. In some circumstances, though, what I've just described might not be ideal, and we could potentially verify you as an accredited investor ourselves. However, it would require us verifying you on the basis of your assets, which would have to be greater than $1 million outside of your personal residence. Now, these are ORs, right? So if you can get a letter, or if you can send us W-2s, or you can get an Invest Ready letter, that's most ideal. But if you need to send us properties that you own along with sales comparisons, we're going to have to get a credit report for you, but we can do that all. Just email us at ir@househack.com. Of course, with any investment comes risk, and that's absolutely true of HouseHack. So this video is neither a solicitation nor can we guarantee any gains to you. In fact, you could literally lose all of your money. We can't make any promises, and to be fair to anyone, we're not even projecting any kind of internal rates of return to clickbait people or cash flow. At this point, you're investing in HouseHack because you believe in me, in my vision, in wedge deals, and the company, and the solid foundation we plan to build as outlined in the prospectus at househack.com. I'm putting my reputation on the line, and quite frankly, I'm honored to be able to do that. Thanks for watching.